probably like been trading full time, investing full time for 18 years now, 17, 18 years. And my view pretty much throughout that time has been markets are overvalued. So I think I fixate upon the negative a bit more than one should. But long term, it kind of plays out for me. It might reduce the quantum of my wins, but it really protects me when things get bad. Even though they haven't really in the last 17, 18 years, there have been intermediate drops and troughs in the market where having that kind of outlook helps. Uh, I think the market is overvalued because I feel uh, uh, the earnings of today do not warrant the multiples of today, and we live in a very globalized world. Everything is so much more connected today than it was even like a few years ago. And I do not see why in the situation that every global market seems to have had some kind of a reckoning, seems to have corrected so much, why we are holding up in the manner that we are. So uh, I don't see the justification for that in the numbers that I look at when I look at economic indicators. I feel inflation is a problem in India, and if history is any kind of a teacher, inflation never really has a V curve. It doesn't go up to 10% and immediately fall to like 4%, right? Like, I feel it will be a long drawn problem for which interest rates will have to remain high for a long period of time, a multi-year period, and growth is bound to slow down in that phase. There are some positives to weigh the other side to the negatives that I was speaking about. I mean, I could add to the negatives and say trade deficit is bad. We're importing a lot more than we're exporting. Unemployment is a big issue in the country. We have an election coming up, which means industry might be ignored for populist decisions, at least in the very like 6 months prior the election or a year prior the election. So outside of all of these, the positives, if one has to weigh, is I think the overall narrative around India in the world globally is very good. Uh, we've had great consistency of government on the top, and the Prime Minister has done an incredible job in selling the India story abroad. And that consistency has made us uh, very interesting to many global investors. So that adds some kind of a tailwind as well. But if you were to compare the tailwinds and the headwinds and look at where the multiples are today and how much other global markets have corrected, I remain a bit skeptical about valuation. So ever since India has opened up in the 90s, we've pretty much seen one kind of a market in real estate, in equities. It's been bull all around, right? In that way, we're a relatively newer economy, or I would rather say we restarted in the 90s. But if you look at economies globally, you look at America in the 1920s, you look at what happened to world markets in the 1940s, preceding World War II, or again in the 1960s. There have been many times when there have been bear cycles which have lasted 10 years, 15 years for different developed markets across the world. If uh, if we take the base case as 11%, which is what the Nifty has done in the last 10 or 20 years, uh, I am not entirely certain that the next 20, 30 years will be 11%. I think we are more evolved as a market. We are significantly larger, and that 11% will probably slip down to 8%, 8.5%, or whatever. With debt sitting, recently I was looking at even SBI's fixed deposits, and they were offering 7%. Uh, if the use case for you is risk-free 7%, equity market risk 8, 9%, uh, even though the other might perform in the long run, it still makes sense to have that stability in your portfolio, because the ability to, kind of like sleep at night is also very relevant. Like, you want a portfolio which is robust and gives you a certain amount of peace of mind as well. I feel that GDP per capita, that $2,000 a year, will definitely go up. And as that does, I've taken a big bet on multiplex companies, PVR, for example. I feel even now in India today, there aren't many avenues where a family of four can have entertainment at under 1,000 rupees for 3 hours in a safe environment with air conditioning and all of that. So I think consumption story, especially focused on the middle class, I feel might do well. The one good thing PVR has done during the pandemic is manage debt very well. They've managed to renegotiate with most landlords, and the management team is incredibly sound. And this is not like a recommendation for anyone to buy, but this is just like, just an example of a certain kind of company that I have been committed to for a while. And yeah, so everything like that, like companies like this, which take advantage of the middle class growing as a segment in India, I think will do quite well. Let's say inflation were to like remain at 8% and growth goes down to say 3%. In my mind, that will feel like an inflation in India. I think unemployment will go up significantly. Things will be a lot more expensive. Uh, I think a lot of the wealth in India has kind of like found its way to real estate. I think a disproportionate quantum of our savings is sitting in real estate. So I think on the ground, we will really sense and be able to taste a recession when real estate corrects in India. And I'm a real estate bear, as I have been for a long, long time. But there is so much hubris attached to that industry in India. You talk to like most real estate developers, they will tell you blatantly that land prices can never fall. I can have many debates around that, starting from the demographic one with fertility rates dropping, the argument that more people but same amount of land does not hold true forever, or how higher interest rates will affect demand for home loans. And there's a bunch of stuff I can say, but uh, in summary, the hubris attached to how much they believe that land prices can never fall. I think the day land prices do correct, things will be crazy in India. I think uh, it won't fall 25-30% and stop. I think if it falls 30%, the next 10-20% will come very easily. When we start talking about a recession is when equities will get hit. But when we're in a recession, I think things are fine from an equity market standpoint. I would presume, I mean, I'm not such a bear that I want this to happen, but I hope that India is able to avoid any kind of financial calamity and people continue to grow at a really good pace, and we have like 8% GDP growth for the next decade and stuff like that. But if they were to, if things were to like get bad before they get better and we were to enter a recession, I would assume, we would have a 4-5 year period where there would be no gains made from the stock market, while your money is getting eaten up by inflation at a rate of maybe 7, 8, 10%. So the thing with inflation, Charlene, historically, people who have been able to beat inflation beyond a point, like you take Walker in America, for example, he took interest rates up all the way to 18%, but he had the ability and the gumption to be able to take that stance. And America saw many years of growth after Walker's time. But in the current setting, in the current world as we know it today, I don't think anybody is sitting on that. Uh, Nobody is that stable to to take such a strong call on moving the rate cycle of any central bank across the world. So it'll be interesting to wait and watch. But I think if there were to be a recession, 4-5 years of no money being made in the stock market is totally possible.